Traders, Anthony here. We're looking at gold. So we've got this daily time frame. What I'm interested in is the fact that this has traded down into this low under here. See this green candle? I'll just pull that across. So it's hit the liquidity under this level with a vengeance. You can see it here. And what I mean is sell stops that were resting under here prior to this bullish expansion. So it's traded down into it, it's hit that, and you can see obviously the reaction with this wick. Heads back down into it, another dip into it here. Now we're seeing this bullish candle on the daily time frame. My bias with this is going to be bullish based on what I'm seeing on the chart. If we scrunch it up, we get the sense that this is definitely heading north. So my bias is bullish. It's traded down into a key support zone. I wouldn't be looking to sell into that. So I'm going to go down now to the 4-hour time frame, get a bit closer to it. What I want to see here, now this is trending bearish at the moment on this time frame. So we've got these lower highs here. Thing is, we've got a higher low, double bottom. All right, so this is kind of setting up, in my opinion, more bullish than anything. I'll be waiting for price to set up. Okay, I don't want to get involved with this yet, but what we need to see, like it's traded into this level here. I want to see this level taken out. We'll just grab that for a start. Well, we've got this range. We'll take the whole thing. We'll do that. And now let's go down to the lower time frame, 15-minute chart. Right, on the 15M, starting to trend up. Just want to be a little bit careful. Look, I mean, gold is incredibly volatile. It can head in either direction with a vengeance. So just be careful with this. So what I would like to see with this would be, if this continues, like we've got this trend now, really nice trend, I'd like to see it continue up to this high, break the high, and then retest this high, something like that. So that would be a cue for me to get involved. So let's just hypothetically kind of paint a bit of a picture here. So it trades up, it breaks the high, and you want to see it kind of wiggle around a little bit here. This is a big level. In other words, it's going to hit the, see this candle here? This will have buy stops resting above here. So it'll hit this level, and then you probably want to see it pull back. Let's just actually grab this on a 1 hour. Just clear the decks. All right, let's just call this our draw on liquidity, potentially. All right, 1 hour chart. So we want to see it move into this level and then possibly come back down, and then, we look for that. I don't want to make this complicated, but you've got this red candle. Let's just pick up the candle body and I'll just show you something. It's pretty simple. We'll just call that a support level. This is the target that I'm looking at the moment. I don't really want to get involved with this yet, but if and when that hits this target, you're going to have the swing low, swing high, and the retrace. Grab a Fibonacci, pull it from this low to wherever this finds resistance and rolls over. You want this entry point on the retrace. In other words, we're looking for this swing retrace into equilibrium, and you can see how I've colored my 50% and 61.8 fib. If this plays out, that could be a buy, but more importantly, I really want to see an ABCD equal measured move back in, and then that. This here is what I'm more interested in than this pullback in here. That would be a significant move, and then you're going to be looking at, there's a target right here. So the draw on liquidity, if it plays out like this, would be target 1, target 2, and then after that you've got this price gap, or this imbalance here. Well, it's not an imbalance, it's traded back into it, but we get this thin candle, and the next draw on liquidity would possibly be around here, around these lows. So something like, well, that could be a thing, right? So you want to mark up your chart and have these levels set, and then you got these highs here. Right, so we've got some really specific target levels. If this breaks this high right there, if this plays out and we see the break of this high, the pullback down in, retest and fail will be the thing. And I mean, look, that could be a nice outcome if it shapes up as such. If not, we don't take the trade, right? The idea is redundant. I need to see the break of this high right here. It's got to break that, come back, retest. Look, if you want to get technical or a bit more specific, let's just go down to a 15, and The kind of price action I'm going to be looking for here is going to be, this is my point of interest. I'm really interested in this level here. All right, you want to see it come back down into here. All right, so this is support now, and then it ranges, and then we want to see it, okay, create some sort of range around this level. Well, that would be my entry point. More importantly, I think it would be the break of this market structure bullish here, there. Break of structure bullish there. Right, you got to have a bit of a plan. That's a plan. I want to see this level taken out. I mean, you could take the risk and go for this one, this pullback here. Okay, if you game, that's a thing. Target, well, you've got these targets and beyond. I mean, look, that could be, let's go for it. Okay, there's your target up there. Just understand the risk, but set your stop loss under this low. And we're just looking at this trend. Okay, we're looking at swing low, swing high, retrace. Okay, low, high, retrace, low, high, retrace, right? So these previous lows don't get taken out while this is trending, So you can then assume that this previous low here is where you're going to place your stop loss under the previous swing low. If this trend continues, we're on a winning streak here. At some stage, this trend is going to roll over and turn the other way. So you just want to watch out for that. Okay, but trend continuation trade, that's the idea. And understand the risk. Can it get taken out? Yeah, absolutely, 100%. Look, seriously, guys, a lot of people are going in with big lot sizes. We've had some really aggressive moves in the market. The Japanese have raised interest rates. It's causing a massive stock market crash. The yen has been rallying, and now, the yen's spiking back up into liquidity and hitting stops. And I mean, look, the market is pretty wild at the moment. So expect gold to be volatile on the back of that. But I think with the yen interest rate rise, and all of this nonsense that's going on in the world at the moment, I'm bullish gold, right? But you just want to be careful, wait for the setup and expect volatility. And look, what I'm getting at is don't trade with big lot sizes. Be conservative, be consistent with that, and just keep taking money out of the markets, because at some stage with this volatility, you could have a basket of trades in that might get taken out. That's the reality in this current environment. This is this hasn't occurred for a really long time. We saw it in 2008 or whatever, and in the past we've seen strong moves like this in the market that have taken people by surprise, and the volatility has kicked in. It's a really tricky market to be trading, the most difficult market to be trading at the moment. You get through this, you can get through anything. All right, so just be careful. Be consistent. Be very conservative with your risk, and have your strategy, trend continuation, and just keep chipping away. I would love to hear your comments, guys. Definitely leave a comment below. Share your thoughts. With that, I hope you have a great day. Safe trading, and we'll see you in the next one.